All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and today is Friday, May 10th. So, this is not only the day recap, but it is also the recap for the week. And it will be a little bit shorter of a video than what I usually shoot on Fridays because let's face it, this week we had so many headlines. If I see another trade headline about, or yes, another headline on trade meetings and so forth, I think I'm going to throw up. So certainly, if you made it through this week, congratulations. This was not an easy week to trade because just with the headlines, right? I mean, just a ton of headlines in the last couple weeks, right? If you coming into this week, I was thinking that this would be a little bit easier of a week because we've had so many weeks of heavy earnings. We had the FOMC meeting, and it kind of felt like, oh, coming into the week, this should be a little bit easier than past weeks. And then remember on Sunday we got the trade headline, and it's been a circus ever since that Trump tweet about reinstating or adding on tariffs, and you know that story as well. So what I'm going to do in this video is just talk about what we did this week. We'll talk about how I approached this week, what I did wrong, what I did right. There's always wrongs, right? Especially with this type of when volatility picks up like this. So I'll share with you some of the things that I did wrong, and hopefully that will help you improve because, as you know, I've been doing this for a long time. I've been trading, since I started my financial career back in 1998, I want to say, when I was an intern at Morgan Stanley Dean Witter. From there, that's when I was in college and I became a financial advisor when it was called Dean Witter, and then it merged with Morgan Stanley, so then it was called Morgan. So anyway, so I've been doing this for a long time. I traded through the 2000 tech bubble, really where I was a big institutional trader and traded heavy stuff was in the financial crisis, and that was really where the volatility was huge. But without going too far off the path, so these little pullbacks, even though I've been through larger pullbacks, there's still, everyone is difficult, right? Everyone, you always have the sense, like I think this morning where, around 10 o'clock this morning when we were free falling, about 10:30 maybe, you feel somewhat ill when you have positions on and you're just watching like waterfall type price action. So let me go over let me go over the performance first, and then we'll get into the nitty gritty of the week. But I do like to do a quick recap of sector and performance. And again, what I thought, this is complete hindsight 2020 stuff, right? And by the way, I don't need the option flow, so I'll expand this in just a second. But one of the things when I sent out the video from last week, it seemed like there was so many things that just lined up so perfectly. The small caps looked great. International markets looked great. Perhaps everything, again, this is hindsight 2020 stuff, but perhaps everything just looked a little bit too good. Sometimes that happens in the market when everything seems like it's going the right way, that you do get a knee-jerk reaction of when something negative happens, and possibly there were just too many things that were going right. And this week, I think it went completely on end. Where today, I think this in the morning, it little capitulated with bad news. I mean, there's only so much bad news that can be temporary bad news that you just kind of have to get through. But so I like to keep the previous week's performance up. But this week, I think they said in the financial media earlier today, and I don't know if it still stands because, again, the price action was pretty furious today, but they were saying that this was the worst week of the year in terms of S&P. That could be right. Down 2% for the week, S&P. Diamonds were down 1.9%. Small caps were down a little bit worse, down 2.5%. Tech, or I shouldn't say tech, but the Qs, it is mostly tech heavy, down 3.2%. And here's where it really gets interesting: is emerging markets fell 5%. Again, big, heavy China in there. IFA 2.5%. International developed markets down 2.5%. Bonds, an interesting. There was some things that just were not crazy bid in terms of risk off, right? TLT was only up 1% for the week. So it really, and gold, which if anybody can figure out gold, congratulations to you. I cannot. Gold was only up 7 basis points. I look at this every morning in our pre-market session. I glance through the charts. Oh, there's, and I say, look, there's gold. Gold, is becoming just less and less of something I think that has any significance to it right now. But in any event, I have it up here because it is an asset class. Drilling down to the sectors, you could see it's going to be what you probably think. But again, this was the week's prior performance where China internets led. This week it was the opposite. Chinese internets were down 7.6%. Really puts things in perspective for this China trade war headlines that are going on. China really got hit a lot harder than the U.S. markets did, down 7.3%. Also, if you look down here, ASHR, which is the China Shanghai ETF, fell roughly about the same, down 7.4%. China fell 6.5%. There was a decent outflow in FXI that landed. This is what fund flows look like from the ETFs. It's on the bottom of my screen. FXI had a pretty large, I think they said that was one of the largest one-day outflows ever in the FXI China ETF. Remember what we talked about a few weeks ago? Oh, I hope I didn't just change. Yeah. Just want to make sure I didn't screw up the screen there. But EWH, so let me just remove this here because we don't need to look at option flow at this point, which I'll talk a couple sentences about the option flow, but just to finish my thought here, remember what I talked about? This was a month ago, and I was talking about how there was big outflows. If you're not familiar with this ETF, it's EWH. It's Hong Kong, right? It's basically the Hang Seng. So it's very similar to FXI. Just everybody always quotes FXI, but look at the inflows that these guys caught. Whoever did this trading, very, very good. And then I remember talking about this a month ago in the video, and I retweeted this out earlier, was that look at where they started to take money out of this thing. And then here's the knee-jerk outflows. Also, emerging market bonds were something that we talked about weeks ago in terms of outflows. That has also, even though this hasn't really picked up, I know that they on Bloomberg, they also talked about EMLC, which is another emerging market bond ETF. Look at that pickup. So people are a little bit spooked about emerging markets right now with everything that's going on. Rightfully so, right? Some of this is very headline driven. You feel like you get caught if you're in something that, moves down 7% in 1 week. Other performance, interesting XOP. It must be because Anadarko is probably in here, but that outperformed because if you look at OIH, which is oil services, that fell 5%. Gold miners, so you can't really hide in these places and expect to make a lot of money when you have gold miners only up 15 basis points, consumer staples. So even the risk-off areas didn't really fare that well, even though they were marginally positive. XLE is also in here, just down 30 basis points. Even utilities, which I thought was interesting, had a big down day one day this week. Home builders, they fared better. They had one day, I think it was yesterday, that they led the market in performance. Healthcare did okay. And then again, further to the Chinese internets, semis, just very sensitive trade areas or component areas in Asia, semiconductors. Intel also coming out. By the way, my opinion of Intel is they're not one of the leaders in the semiconductor. Are they huge and big size? Yes, and do they know some trends? But they've been having problems for a long time with data hacks and breaches and all of that. So robotics stocks also fell pretty hard this week. Metals and mining, you go down the list. Surprising that FANG got hit so hard too, like the internet stocks, because I view that as more of a hiding place for trade. But it was basically, when people sell, sometimes people sell everything. So we'll see if those areas bounce back next week. I think that's enough for the performance. I could go on a little bit longer about that. Let me go over next the technicals in the S&P. We almost took out this version point of control. We gave a member webinar this week where we really talked about significant areas of support, and we mentioned that unfortunately the S&P could go down probably about another 2% when we gave that webinar on Wednesday. And sure enough, we basically tagged this thing pretty closely. So it is so close to being taken out. I think it's just, I would say, almost close enough. I know my colleague Webb Begol, who created this indicator, says that nothing is close enough. It has to actually be taken out. But damn, did that thing get close this morning to be taken out. The version point of control, right? We want to see those things taken out because often we'll see the reversal. But now we've got a couple. So right now, is it active? Actually, no. You only have to worry about that version point of control if we are below value. Notice that we closed by a hair back inside value, so saving grace a little bit. So one day, of course, is not a trend, but you do like to see these big hammer bars in an uptrend on the 50-day moving average. I think that's pretty strong. So what was my focus? So I'm not going to go through everything in terms of technicals because I said I wanted to keep this video maybe under 15 minutes. That's my goal for the day. IWM, although looking ill, did not break the 200-day moving average by closing. We'll look at the Qs as well. The Qs, looks a little bit better because it did close. It's got a little bit more bumper room, not much, but that value area is 182.63. These are good support. So we go over these support levels. If you're not a member of Tribeca Trade Group, as this video is for free, it's open to everybody. I put it on my Twitter page. These are the things that we go over. We really give a nice game plan and map of what levels that you should really be mindful of on a day-to-day basis in the indices. And then I provide my own flavor of, I think I was pretty spot on today talking about what areas of the market that I want to go into. So I traded, here's the blotter for the day so you can see that I don't make these things up. But CME was a great looking trade. I'm still in that trade. I was on Real Vision earlier in the week talking about how the weekly bar was important with CME. Look at this thing. So again, I took targets Thursday, but I'm still in the last piece of this trade and of this option trade. And look at the weekly bar in the CME group. Really, really nice. So if you missed this trade, I still think it just closed. The level that I was concentrating on was 178 for a weekly close above, and you got that. So I really like this trade. That's why I did not get out of it completely, because I think that this has more to go. Next, in terms of trades that we did, and just give you my thought process, which again, we went over all of this in the pre-market session. I said, hey, I want to go into strength names that are in uptrends that are pulling back into support. So further, I went into Twilio for a day trade. This worked out really well. Interesting that Twilio, get off the weekly bar. We don't need that right now for a day trade. But this thing shot up, and I was able to take, I think, 3 targets right on that first couple bars, and then the whole market just sank. And I was able to get out of the last piece right around here. So I still think, so why did I pick Twilio, right? Because these names have nothing to do with trade stuff, right? And if you go through these names, like Zscaler, the software group is a hiding place. And this tends to be, you tend to see whenever there's a market pullback, what names shine. I'm sorry, let me say that correctly this time. You want to take note of the leaders in the market, whatever groups they are, the first ones to actually go and to outperform. Those are your market leaders, right? And again, we've been talking about this for well over a year. It's the software names. They continue to act very well. Not every day, but see if you could find the pullback in Zscaler. Right? I mean, they're holding up so much better. Look at Cadence, right? The smaller cap ones are doing it better. So Cadence, another good one. Workday was something I also traded today. I mean, one day of a pullback? So Salesforce, which I got into yesterday along with Coupa. But Salesforce needed to rally today. I talked about this on Bloomberg yesterday. This is my trade idea. We saw heavy call buying yesterday into one of the names that I'd love to buy when there's market weakness, because institutional buyers seem to come back into this name over and over and over. Look at Coupa Software. This was also another name that we played this week. I actually added to it in today's weakness. But, this, to me, looking at this group And some other groups that I didn't see what McDonald's did today, but McDonald's. I mean, look at McDonald's. Even though they have international exposure, what did CMG do today? These names don't look like the restaurant group has been very strong. Look at Darden Restaurants. No tariffs on breadsticks apparently at the Olive Garden. So there is strength. You just have to really, figure out what names. It helps to figure out what's outperforming when you have a weak tape. What was, I think, puzzling today was the FANG stocks, right? And they have not been, other than for brief times this year, they have not been the market leaders. And so it's maybe they're just a little bit too mature. I think I'd love to go into Amazon on weakness, but you have to kind of take note that this group is not the market leadership anymore. Again, from time to time, it does kind of show some momentum to it, but just better names I think to be in right now than Fang, and it rotates around, so that will come and go. But yeah, here's just so you could see Microsoft, right? Look at the Microsoft setup. This is something that we were talking about several times this week. I was watching it because I thought it might actually break support, which is 124.60 for me. It did not, so I added to it, and I did not add on the absolute low of the day, but that's fine. Also, PayPal is another name, also showing some nice strength. Again, so so that's the beauty of these pullbacks, is you could get into names that you're like, oh, geez, I don't want to get this thing at a 52-week high, right? So that's really where you kind of have to do your work. Let's talk a little bit about risk management. So, that's what we traded. Also, this is what we do if you're not a member. This is exactly, I said, groups that have less exposure to tariffs, software, and the internet. This was, and then we went over this in the pre-market session, but over and over. But this is the guidance. One of the main things that I said when I really have something that I think is useful, I do come out and say it. But I said it feels like after the Uber pricing, I said now that we've gotten past the trade meeting ended, and also Uber finally had the IPO. They had trouble pricing that. So once that was out, just gets things like off the table. It gets the clutter out of the way, because I don't think everybody really wanted to pay attention to Uber today. I certainly did not. I had no interest in that IPO, and that from what I've been talking about in the trading room, if you're a member. So that's what we do in the private Twitter feed, where the trading room gets a little bit hectic during the day because everybody's putting in their trades and so forth, which is great, and everybody did a phenomenal job this week contributing. So really happy at how cohesive our group is and the team collaboration that we have at Tribeca Trade Group with members. It is spectacular. But that being said, if you work full time, then the private Twitter feed is a little bit less noisy for you to kind of just jump in and see what's going on. So in terms of risk, and where I kind of screwed up this week, I really didn't play much to the short side. And that's something that I need to improve on. I said, a couple things that I did wrong, maybe having a hedge on. I talked about that several times this week of having a hedge on. I just really did not put on anything. I had a long in TLT and a short in HYG. But other than that, I just really wasn't playing things to the short side. So why don't I do that? Or why don't I do that more? Play things to the short side? Because you really have to be quick. Because when buyers come back into this market, it could be furious. And that's another thing is, I think one thing that I've learned over time when I do play on the put side, you got to be pretty quick. It does not age well being in puts right now in an uptrend. So you could have had some nice profits, but if you added puts here, you got smoked, right? If you didn't take them off around here. So that's the whole thing with it's great to have some short-term protection when you see that the market is losing momentum. And again, something that I will try to put on a little bit more when I need to, but it is really tough to play shorts when in an uptrend. It helps when we've got this trade stuff going on, but the other thing is really positioning. it's okay to just take off some positions and then to revisit. Even if it's positions you like, I like to the way that you could try to think about this mentally is think about your starting team. This helps me, right? Only have maybe the 5 best or the 10 best or the 15 best, players out there. If you have, if you like 5 other names, right? If you've got 20 names that you like all 20 names, it's very difficult to manage that many names, especially when there's volatility. And if you're trading options, it is much, much harder. But if you concentrate your positions and say, hey, I'm only going to hold the best setups, you're going to fare better, in my opinion, when you have either a weak tape, a choppy tape, or obviously a higher volatile tape like we saw this week. So that's kind of the lesson, is that really, last week I could see where the problem arose because everything looked great. Financials looked good, small caps looked good, Chinese internets looked good last week, in terms of the charts. So that said, just because everything looks good, you still have to be a risk manager and stick to your program and your profile and not get over the tips of your skis with having too many positions on and too much risk. All right, so that's it. We will do as our usual. We will do our weekend newsletter where we'll concentrate on some setups. I've got a number of other things to go over, a number of other names that I'm not going to go through here in this video. So thanks for watching. Have a great weekend and relax a little bit. This was a tough week in terms of headlines. Congratulations on making it through it, and on to next week.